Hey guys, Adam Rose, Vice President and Senior Law Officer of Western Ohio Mortgage here in Sydney, Ohio, and this is another episode of the Mortgage Guy podcast, and it is another market update and some differentiating between pre-qualification and pre-approval, what you need to know, and some things that can impact you. So, first thing I want to talk about is VA. So that we got some announcements from VA that they are doing their best in this market to make sure veterans are staying in their homes. You know, everybody's going through some tough times right now. We're moving into technical recession, and jobless claims are up, of course, and that's impacting some people. So, VA announced the U.S. Department of Veteran Affairs has asked mortgage servicers to halt foreclosures on veterans through May of 2024, meaning just pause it. Stop what you're doing. This 6-month pause will give the government time to roll out a brand new program that the White House did announce in October. Well done. That's one good thing that the White House has done so far. That will help veterans who are behind on their mortgage payments but do not qualify for traditional home retention options. And so what they mean by home retention options is usually there are forbearances, there are interest-only payments for a period of time. Sometimes the loan servicer is going to work with you to stay in the home. Well, VA is rolling out their own program to keep those veterans in those homes. So that is fantastic news. And I hope everybody that is going through that right now can get the help that they need and stay in their home, especially in this market and economy. So, good news there. Quick update, though, on pre-qualification, pre-approval. So, let's talk about that. So, pre-qualification, it's a term that most people don't use anymore, but truly what it is you call your borrower, you call your lender, and you want to go buy a house. Haven't provided any supporting documentation supporting your claims that you're giving to your lender. So, for example, if you give me your income, you give me your employment history, you give me your assets, you give me all this fun stuff, but you have yet to submit any kind of documentation to support such, that is classified as a pre-qualification, right? So based off your credit score and what you told us, you can go shopping. Those are good for about 30 days, okay? Again, not highly encouraged to use those. Hell, I've heard of lenders not even pulling credit in issuing these. That's a scary thought. But a credit pull is always required on these, on the pre-qual. So it's a pretty good idea. So as long as that information is accurate, they're about as good. Pre-approval, so there's some limitations on this, okay, time frames. Once you go through this process, that is the same process as the pre-qualification, but you're saying, hey, here you go, take a look at my bank statements. Go ahead and take a look at my pay stubs, tax returns, whatever it might be, and just kind of confirm what I told you was accurate, like my hourly wage, how many hours I get per week, whatever the case is, and just make sure we don't have any issues. So we do that. We issue pre-approval letters. Now, you got to remember, guys, things do change. It does happen, okay? Especially in this type of a market, we are in a blue-collar area, right? Very heavy manufacturing, and a lot of it is correlated to the car industry. And they're going through a rough patch at the moment. So we are seeing a lot of local employers that are parts providers and things of that nature that are cutting some hours, okay? So, yes, traditionally that borrower would be getting 40 hours, and a lot of times we're having these conversations like, I work overtime every week, at least 10 hours or 5 hours, whatever it is. But we usually qualify off your base anyways. But we get the information, and at that time they are working 40 hours. But 60 days later, 30 days later, what have you, right? While they're shopping for this house, there are no pay, no penalties. There are 36-hour work weeks, or they're cutting down to 32 hours work weeks because they're behind on parts. This type of stuff can have an impact on your ability to purchase. All right, so make sure you are keeping your lender up to date on pay stubs, hour changes, things of that nature. That's very, very important. We can run into these issues that are outside of our realm of control, and we do our best to battle them, of course, and try to get those fixed. But just know that just because someone issues you a pre-approval letter, if you are 60 days out, 90 days out, whatever it is, things can change in the market, and we want to make sure that we're not going to have any issues on a transaction if you get into contract. Same thing goes with bank statements. With bank statements, we'll validate assets, but they run into a car repair and they spend $2,000, or they went out and spent a bunch of money. We see it all the time, especially in the upcoming tax season that we're going to have in the next 2 months. We rely a lot of times on, hey, I file my taxes, here it is, I'm getting $5,000 back, this is going to be my down payment. And as soon as they get it, man, that money just disappears. So, guys, make sure that you hang on to that stuff. You keep the money in the bank. You're not spending your down payment monies while you're shopping for a house. If something pops up and changes, please inform your lender so they can make adjustments and they can re-coach you on what needs to be done. And I can't hammer that home enough. Since we are approaching the tax season, you guys are going to get a tax return, hopefully. Remember to keep those monies in the bank account. Okay, don't withdraw it in cash and use put it as mattress money. So we don't want to try to document that. That's very, very difficult. So those are the main differences between pre-qual, pre-approval. 90% of the time we are doing pre-approval, right? Documenting what they are giving us or what they're telling us, and running those findings through whatever agency that we're running them through to consider or to make sure that we're getting an approval. So I wanted to hammer on that a little bit, guys. There's so much more in detail that we can go into, and I actually plan on having a guest to dive into some of the shortfalls that we see, pitfalls that we see when this does occur, and we'll get you some more information on that. But that's it. That's all I got for you this week, guys. Stay safe, stay warm. It's getting colder outside. Have a great holiday season if you don't watch another video for the rest of December, and we'll see you guys next week on the Mortgage Guy Podcast. But remember, subscribe on YouTube, check us out on Spotify and Apple Podcasts, and we'll catch you later.